since March of 2020.
Chief Executive Mark Zuckerberg had warned investors in a call earlier that Meta.
We have made a lot of mistakes in running the company.
And then deeper cuts are coming.
This is the story of an overrated concept in Mark Zuckerberg's business venture, Metaverse, which lost more than $18 billion in the Reality Labs segment, on revenue of just over $4 billion. A venture that was predicted to change the way we live is now falling aggressively and is almost on the verge of a big collapse. Looking at the market stock value, it seems like the company that everyone loves to hate is facing serious trouble if nothing changes. But how did all this happen? Why is the biggest move of Zuckerberg's life failing? And why are people losing millions of dollars? Let's find out in this video. Less than a year ago, Meta was valued as a $1 trillion company. And now, the net worth has dropped to less than $500 billion. $402.35 billion at the time of making this video. Looking into another scenario, the stock price of Meta has fallen to less than what it was back in 2016. That means if you invested in Meta at that time without pulling profits, you've lost money. As of January 2023, the company is down 70%, making it the worst performance on the entire S&P 500. Now, it looks like Mark Zuckerberg's multi-billion-dollar effort to revolutionize the concept of a virtual world looks a lot more like Second Life in all the wrong ways. According to most reports, Zuckerberg's Metaverse platform Horizon Worlds could perform better, but many users have abandoned the network because of problems within it, including complaints about poor rendering and allegations of sexual harassment. There is no explanation for how Meta spent $15 billion on the platform with an extremely low number of monthly active users. And even after investing so much money, Horizon World doesn't even make the top 10 list of major Metaverse sites. Over the last 18 years, Meta CEO Mark Zuckerberg has experienced both success and controversy. The young CEO is credited with founding a social network with more monthly active members than any country on the planet, and his majority voting rights give him entire control of the company, which also means that he's frequently the target of any backlash. The corporation that Zuckerberg established has withstood scandal after scandal, as it's grown from a social network called Facebook to a metaverse company called Meta. However, in 2022, user numbers halted for the first time, and Zuckerberg's net worth plummeted. According to the Bloomberg Billionaires Index, he's now worth $54.7 billion, ranking him 29th in the world. That would seem really awesome, except Zuckerberg was valued at $125 billion at the start of the year, and within that year, he lost more than double of what he had earned in a decade previously. Facebook was founded by Zuckerberg and his associates Dustin Moskovitz, Chris Hughes, and Eduardo Saverin. It allowed users to create their own accounts, post images, and chat with other users. Until June 2004, the group managed the site from a dorm room at Harvard University, but Zuckerberg left out of college that year and relocated the firm to Palo Alto, California. From the very first day, Facebook was seeking unbelievable growth and had 1 million users by the end of that same year. Excel Partners, a venture capital firm, invested $12.7 million in the network, which was solely available to Ivy League students at the time. The site's membership grew to more than 5.5 million users by December 2005, as Zuckerberg's business provided access to additional institutions, high schools, and foreign schools. That was the time when everyone was dreaming to be a part of this company, and people were ready to invest heavily in the venture. Zuckerberg declined proposals from firms such as Yahoo and MTV Networks because he didn't want to sell out. Instead, he concentrated on extending the site, opening it up to independent developers, and introducing new features. He was ready to enjoy an upward trajectory. However, in 2006, the business magnate encountered his first major setback, when the authors of Harvard Connection alleged that Zuckerberg stole their idea and demanded that the software developer compensate them for their losses. Zuckerberg insisted that the concepts were based in two distinct sorts of social networks. Following an examination of Zuckerberg's data, Incriminating instant chats suggested that Zuckerberg may have purposefully stolen Harvard Connection's intellectual property and given Facebook users private information to his buddies. Later, Zuckerberg apologized for the damning communications, claiming that he regretted sending them, although the two parties agreed on an early settlement of $65 million. The legal struggle over the case lasted long into 2011. After Narendra and the Winklevosses claimed that they were deceived about the value of their stock. With all of these allegations, criticisms, and setbacks, Zuckerberg and Facebook have continued to thrive. In 2010, Time magazine named him Person of the Year, and Vanity Fair named him the top new establishment, as he was on the rise to be on the list of the top billionaires in the world. Facebook's first public offering, or IPO, in May of 2012 garnered $16 billion, making it the largest internet IPO in history. The Facebook stock price fell somewhat in the early days of trading after that initial triumph in the IPO, but Zuckerberg was anticipated to weather any ups and downs in his company's market performance. Facebook reached the Fortune 500 list for the first time in 2013, making Zuckerberg the youngest CEO on the list at the age of 28. But there were still many hurdles and scandals in the journey of the youngest billionaire. Zuckerberg was scolded for growth of fake news items on his website in the run-up to the 2016 presidential election in the United States. In early 2018, he issued a personal challenge to find better strategies for shielding Facebook users against nation-state abuse and meddling. A few months later, it was disclosed that Cambridge Analytica, a data business with links to President Donald Trump's 2016 campaign, had utilized private information from around 87 million Facebook profiles without informing the owners. The ensuing uproar appeared to weaken investors' trust in Facebook, with its stock plunging 15% after the revelation became public. After a few days of silence, Zuckerberg appeared on different media channels to explain how the firm was taking efforts to limit third-party developers' access to user information, and he stated that he would be pleased to testify before Congress. On March 25th, Facebook ran full-page adverts in 7 British and 3 American newspapers, each with a personal apology from Zuckerberg. He vowed that the business will analyze all of its applications and notify consumers of which ones they might disable. With investor organizations increasingly calling for his resignation, Zuckerberg came to Capitol Hill and spoke with senators ahead of his 2-day appearance on April 10th and 11th. The first day of hearings, with the Senate Commerce and Judiciary Committees, was deemed a mild affair, with several senators appearing to be perplexed by the financial model that had propelled the social media behemoth. The negative publicity surrounding the 2016 election and the Cambridge Analytica controversy appears to have had no impact on the company's progress. Facebook's shares closed at a record $203.23 on July 6, 2018. With the increase, Zuckerberg surpassed Berkshire Hathaway CEO Warren Buffett to become the world's 3rd richest person, after fellow tech giants Jeff Bezos and Bill Gates. Any gains were erased when Facebook shares fell 19% on July 26th after an earnings report indicated a failure to achieve revenue projections and sluggish user growth. In one day, over $16 billion of Zuckerberg's personal fortune vanished. In 2019, Forbes rated Zuckerberg 8th on the list of billionaires, below Microsoft founder Bill Gates, but ahead of Google co-founders Larry Page and Sergey Brin. At the time, the magazine estimated his net worth to be over $62.3 billion. Facebook made the announcement in June 2019 that it would be entering the cryptocurrency market with the introduction of Libra, which is scheduled for the year 2020. Along with developing blockchain technology to power its financial infrastructure, Facebook also established an oversight entity based in Switzerland called the Libra Association. The Libra Association is comprised of technology giants such as Spotify and venture capital firms such as Andreessen Horowitz. As a result of the revelation, Zuckerberg was once again thrust into the spotlight of Congress. which led to the CEO of Facebook being asked to appear in front of the House Financial Services Committee in October. Despite Zuckerberg's assurances that Facebook would withdraw from the Libra Association if the project failed to garner approval from regulators, he was subjected to pointed questioning from skeptical lawmakers who cited the Cambridge Analytica scandal as well as the other instances of the company's past infraction. The most compelling aspect of Facebook is its ability to facilitate communication between users and their loved ones. Many people take use of it to keep their network up to speed on their lives and in turn receive updates themselves. And that's why it continues to be one of the most successful social media platforms, even to this day. But as a result of the numerous blunders that Facebook has committed over the course of the years, which ultimately led to the rebranding of the company, many people have a poor image of the platform, regardless of the company's corporate name. In addition to this, the normal loop that young people go through on social media in their search for something new also comes into play. Facebook has invested in either purchasing any firm that posed a danger to it or by beating them into submission in order to stop their gradual decline toward irrelevance. WhatsApp and Instagram were both acquired, while Snapchat held firm and was met with a product that replicated its own, Instagram Stories. Facebook even went so far as to acquire surveillance software from Israel called Anavo to keep an eye on the market for social media and identify other applications that are just coming onto the scene, which it would then either duplicate, buy, or destroy. However, Facebook's luck ran out with TikTok, and social media appeared to be moving in another direction. The acquisition of Oculus in 2014 marked the first move into the Metaverse and introduced a fresh take on the tried-and-true tactic of rolling up a whole industry in one fell swoop. Oculus, currently known as Quest, is one of the leading providers of virtual reality technology on the market. The company has sold over 10 million devices at a price point of $300 per. In addition, Meta began purchasing and occupying the remaining area. It was noted in a lawsuit filed by the Federal Trade Commission that Facebook already owned the leading device, Quest, the leading app store, Quest Store, 7 of the industry's most successful developers, and one of the highest-selling apps. The lawsuit was filed to prevent Meta from purchasing the virtual reality company Within Unlimited, now Beat Saber. That legal action is still continuing at this time. Nevertheless, despite Meta's efforts to dominate the business and expressly promote the use of the Metaverse as an alternative to the internet, the products it's producing are not very enticing. People who are using Horizon Worlds are not buying Quest gear because they're not using that platform. According to reports, consumers are signing in to well-known sites such as VR Chat and Rec Room, which has 5 million people who are actively using it each month. According to AU, one of the issues is that Horizon Worlds has not been able to differentiate itself from the other players in the virtual reality landscape. Highly customizable avatars and powerful experience creation tools are 2 of the characteristics that are included in the Metaverse's definition. According to a story published on Kotaku, Horizon Places is comprised of mainly empty, sad worlds. Zuckerberg's use of the Metaverse platform, in which he deliberately fashioned his avatar to look identical to him, is an extremely rare occurrence. The freedom to assume any identity and travel to any world satisfies a significant portion of the fascination that people have with virtual reality, and the Metaverse as a whole. Another problem is the pressure that can be found in the offshoot workspaces known as Horizon Workrooms to become another workspace. Zuckerberg has staked the success of his Metaverse platform to the tune of countless billions of dollars, as well as his whole faith. He is pinning all of his hopes on the same approach of dominating the virtual reality market and destroying competitors. I don't think Zuckerberg's plan to dive into VR business was wrong because VR connects people in a way that other technologies simply can't. But there's so much work to do before getting significant traction in the market, just like Facebook did in 2004. This time, the only ray of hope is that Meta still has more than 4 billion customers, and there's a lot of potential to turn the market stats. So it's time for the social media part to run a proper subsidiary to maintain the business that lost Zuckerberg's attention. But the fact of the matter is that the user base of Facebook, and the world in general, is evolving to the point where they no longer require Zuckerberg's ideals. He was previously in tune with what people all around the world desired and how they wanted to connect. But he believes that an office conference room will captivate people's imaginations more than anything else. Let's just assume that if we had a metaverse for the masses built by someone else, I think we might have seen different results. So, what do you think about the future of the metaverse? Feel free to discuss this in the comments section below. Thanks for watching, and I'll see you in another video.